All right, back in the game, ladies and gentlemen. FundYourFX.com, Bulletproof Traders. Here we go. Today, guys, on the menu, we have the Polkadot. I really like the technical situation here. I think it's trying to tell us something here, which is why we decided to pull the trigger and get into a buy position. But I have to admit, I'm not entirely confident about the bullish overview that I'm going to lay down here for you guys, right? Because the market is still on the back foot. We saw that in the last 48 hours. Nevertheless, there are solid support levels, support key levels that are strong, and I do expect them to hold. But if price action is going to start sliding below those reference points, then there's probably more downside potential on the horizon, right? Now, in the case of the Polkadot, it's very technical. We've been able to capture a sideways movement that started back in late November, so about a month now. We've seen the Polkadot trading sideways, kind of trendless basically, back and forth inside of that, of our defined range here, where we have the top resistance key level at 11.16, right? 11.16. We saw how price action reacted back in early December when it was trying to handle that obstacle, and it couldn't cross over, right? It turned around right off that 11.16 level, and from that point forward, 3 weeks, it's been on the downside ever since. However, it did hit a powerful support level, which is the last line of support here in this range. I'm talking about the black system, of course, which is 6.8488. So we can round it up to 6.85. And we saw price action having multiple tests to that area. We saw price action coming time and time again, testing that area and backing off, right? So I still think it's still inside of that range, and it's still trading above that 685 level. So still that upside potential is definitely on the table. You can see where we pulled the trigger, which was probably about a week ago, and right now we're slightly in negative territory. But again, if price action starts to slide below 685, that's going to be our cue to split, run for the exit. We're not going to wait for our stop loss level to get triggered, right? Because for me, stop loss level is at 5.5450, all right? But for me, stop loss level is more like an insurance policy against, unusual moves that sometimes we see in the market, right? I'm not even talking about the black swan type of event. Just a violent move that from time to time we see occurring in the market. So I like to keep my stop loss level far away from price action. I want to give the market enough room for what I call white noise. Sometimes we got spikes, and we got those long spikes, both from the upside or the downside, where the market is kind of undecisive, but it's still volatile. So we don't want to get our stopped out unnecessarily, which happens quite often. Sometimes you would get your stop loss level triggered, but the price action will still right after continue to the same direction that you were expecting, right? So for me right now, 540, 550, although it's the stop loss level, I'm not going to wait for that stop loss level to get triggered. I'm going to wait for price action to pay respect for that 685, and if it doesn't, that's kind of an indication that it's going to go more to the downside, right? It's going to keep going south, and then it might jeopardize our stop loss level eventually. But again, if it starts to slide below 685, closing out this position, if it's going to turn around later down the road, we'll just jump back in, right? We'll take a small loss instead of a bigger loss if we're going to wait for our stop loss level to get triggered. Now, I want to show you the big picture weekly chart because this is even more profound. From a weekly perspective, we saw price action paying tons of respect to that 685 level by pulling back up, and I'm talking about last week, pulling back up all the way just to land right on top of that 685 level, right? Because it was trading way lower during that week, last week. The lowest low was 603 as opposed to 685, but just before the end of the week it was rushing in to bounce back and close right inside of the range. Again, that that black system, we're talking about 685, the lowest line of support. And even this week, if you take a closer look, it already started drilling through that 685, but again was got that rejection and started to pull back up, leaving a smaller spike this time, much smaller than we've seen last week, which is why this position is still open and we're still bullish from a conviction standpoint, still bullish on the Polkadot, right? But I don't think it's time to get more aggressive or double down or triple down or and so forth. It's just waiting time right now. We want to see price action recover from yesterday's drop, because yesterday's drop was the one that put the whole conviction in question, right? So if price action starts to recover in the next day or two and basically go back to where we pulled the trigger, the level we pulled the trigger, which is roughly around, let's take a closer look, roughly around 7.3. So once it starts to pass that 7.3 area, we'll get more confident in this bullish conviction, and that's where we're going to get more aggressive, increase our position size and so forth. All right, guys, so there you go, a bit of an update here, following up on our active position on the Polkadot. That can also give you a bit of an overview on the rest of the market, right? We know all of those top 20, even top 50 in the cryptocurrency market have very highly positive correlation between the assets. So analyzing the Polkadot could extrapolate to the rest of the market. All right, guys, that's about that for this one. Moving on to the next video. Hope you enjoyed it. Take care.